Can anyone hear me? You guys can hear me, right?
You say yes.
God, that was painful, right? How painful was that? Did it get more painful than that loop? Woo! Jeez Louise. That was horrible. I apologise for that. I apologise for that. Right, so I've got to set this all up again. This is alright. Okay. Okay, guys, can you hear me? Are we good to go now? Leave my webcam. Are we in the business? Good stuff, right, wow, we got there, so guys, we got there. Sorry about the loop. So, for those of you new, this is my second live stream on YouTube, right? So, on Inside Red Pill, you know, that's all cool, but I've got about 5 monitors, and they're all doing different things, and so you know, getting Discord live streaming, YouTube live streaming at the same time, whilst trying to trade, monitor my charts, monitor my own actions. You know, the second stream live on YouTube is always going to be a little bit sketchy, but we will get through it, and we will get on top of it. Right, we'll get on top of it. So the idea of today is to go through the trade setup in this morning's London session, right? So everyone can get a clear picture of why I took it and what were the reasons for that. All right. Let's bring this out. Is anyone taking a trade this morning? Is anyone taking a trade? Anybody taking trade this morning? Because you had an amazing, entry. You had an amazing entry that you could have taken. So let's go through it. All right, let's go through it. Everything's set up now, right? So what did we have here? We had a 2022 model entry, right? We had a 2022 model entry, right? Now, what I want you guys to learn and to know is that you're looking for entries inside of higher time frame PD arrays. So I want you to be taking notes, because this is what's key, right? You can't just be looking for setups willy-nilly, right? You need to be able to find setups with inside a higher time frame PD array, and that is where you're likely to see more successful entries, right? So this morning at 4:30, This is in the London session. All right, this is in the London session. And what we had is we had this daily wick. And as we know, wicks are gaps. Okay, so if price is likely to retrace, it's likely to retrace off equilibrium of a wick. That is a price target. So it validate your entry if you saw one setting up. All right, it would validate your entry. Now, if we look at this daily price leg, so this is the daily chart. The top left is my daily chart. Okay, my top left is daily chart. Top right is my hourly chart. 15 to 1. This is my trade entry chart down here. Okay, for those of you who are new. Where are we inside on the daily displacement leg? Who can tell me? And I can see the comments, so who can tell me where we were? Where were we inside of the daily displacement leg? I worry that none of you can hear me if no one's typing in comments. So I'm not going to move on until someone answers me. Where were we on the daily chart? If no one knows, that's cool. Just say you don't know. There we go. Sue Baker. Very good, Sue. Very good, Axe Crypt. Very, very good. So we're inside the OTE range of this daily displacement leg. So you've now got two confluences, right? You've got two confluences. So yesterday we drove up into a premium of this displacement leg. We were always talking about, I have been talking about for days if you've been watching my recaps, that this was accumulation to drive price higher into what? Into a premium. Into a premium of what range? This leg. Guys, I've been talking about this for absolute days now. For days. So all you need to be doing yesterday was looking for entries long. Now you're looking for entries short in the London session. Right? Because price has moved up into a premium. So you're likely to see a form of retracement or at least a reversal. Right? Just bear with me 1 second, guys. Can you guys all see me on YouTube fine? Because I'm getting some comments that they can't see my screen. Can you just drop in the chat that you can see it? Please. Cheers, Oleg. Appreciate it. So we're up inside the OT zone of this displacement leg, alright? And we had consequential encroachment of this daily wick. And as we know, wicks are gaps, okay? Wicks are gaps. So when we're in that area, we are now validating entries short if they set up. Right, we have context as to why price is likely to drive down into a short-term discount or a longer-term higher time frame discount. Right, we have reasons for it. Does that make sense, guys? Does that make sense? So what we had here is we had the 2022 model, right? The 2022 model which formed here, right? So we had buy side that was sat above these relative equal highs, okay? Buy side. Ooh. Buy side, right? It purged the buy side and ran into consequential encroachment of the daily wick, which was inside this range OTE zone, right? Price moved away aggressively. We got an aggressive displacement leg. What did it do? It took out the sell side. So we have what? A market structure shift. And as we know, price doesn't have to crash through this to validate this as a market structure shift. It just needs to go below it by a tick. Right? It just needs to go below it by a tick. And that validates this as a market structure shift. Okay? The swing low gets broken here. This is a market structure shift with aggressive displacement. You don't want to see just, a feeble one candle. You want to see aggressive displacement. Okay? And so price moved down, you got a market structure shift and returned into what? Who can answer that? What did it return into? It's on the chart. There's no fair value gap there, Sue. So just to clarify exactly, premium NP, so this is a short-term premium, right? So this displacement leg is a short-term premium, all right? You don't have a fair value gap in there, Sue. The reason why is because a fair value gap is from the low of the candle, at the low of this wick. So I'll show you an example of a fair value gap just to make it easier. So this would be a fair value gap. This isn't one you would trade, but this is an example of a fair value gap. Can you see how there is a gap between the candles, right? Here. Right? There's a gap between those candles. So at no point are the wicks touching. On these two candles, there aren't even any wicks, right? But you can see how these two candles aren't touching one another at any point. They haven't crossed over each other. That is a fair value gap. There is no fair value gap inside of this range here. There's one here. This is a fair value gap, right? But this is when you this is when you would know when to and to not take trades. Why would you not take that fair value gap? Who can answer that? Why would you not take that fair value gap? There we go, MP. MP is on fire this morning. MP in the house. Right, exactly that. You don't want to take entries short in a discount. Unless, and there is a reason for that, but we're not going to talk about it today. We're not going to go into it in detail, but it's if price is extremely heavy, price will fail to get above the discount range. But that isn't the point of the topic today. The point of the conversation. The conversation is why was this a 2022 model? So price moved up into a premium. So anywhere inside this range was a valid place to go short. A valid place to go short. Right? So what are we then targeting? This is your first low risk entry. What are we targeting? What would we be targeting? Who can tell me what we'd be targeting? What's the nearest low-hanging fruit that we'd be targeting? There we go. It's funny how everyone inside Red Pill is smashing the answers. We do stuff different. We're built different. So yeah, exactly. We go after the swing low, a short-term swing low. Right? This isn't a higher time frame swing low. Inside of the higher time frame, we are still inside a premium. We are still inside a premium, right? But on a short term, on a lower time frame, this is a swing low, and it's an easy low hanging fruit target. Okay. Now, how would we dial in our exit? Who can answer that? How would we dial in our exit? There we go. Gauxing. Gauxing, Gauxing, Gauxing. Gauxing up. Live by name, live by nature. So exactly that. Standard deviations. Right? So our standard deviation. This is one time standard deviation. Alright? Why would we pick that as a target? Why would we pick one time standard deviation? Someone answer that. Who can answer that? Does anyone have the answer for that? No, not quite. I mean, you're all saying good reasons, but that's not the specific reason why we would choose that as the standard deviation. And that's my style, Christian. Sorry, was it Christian? MP. That's my style of learning, of teaching. You know, there's so much information out there, right? There's so much information out there. That's not the issue. When I first started trading, all I wanted to know was
Process.
someone teach me the process. And that's what I'm here for, right? To help you guys with the process. And I apologise, my webcam keeps dying. I need to get a new one. Right. No, I mean these aren't the reasons. So I'm going to give you the answer. All right, and the answer is you're looking for the first standard deviation that takes out the swing low that you're targeting, or swing high, depending on which direction you're going, right? Depending on which direction you're going, you're choosing the standard deviation that takes out the swing low or swing high that you're aiming for, okay? So in this example, we are looking at this swing low. What's the first standard deviation that takes out that swing low? One time standard deviation, right? And look how long you had to be in your trade, right? 1 hour, 10 minutes. You're in the trade for 1 hour, 10 minutes. Okay? So if I make it full screen, this was your market structure shift, price moved into a premium. This was your low risk entry. You're targeting this swing low, which is a lower time frame, low hanging fruit inside of a higher time frame premium, right? And then you're looking for the first standard deviation that takes out that swing low. One time standard deviation, bang. And look how it respects it and it traces off it, all right? So if you missed that entry, say you missed this entry, right? And you're like, God damn it! God damn it! What could you have done? What could you have done? Who's got the answer there? Yeah, I think you're a bit late to the Discord, the stream, Christian. But I spoke about that at the beginning of the stream, bro. So yeah, 100%. You're in a OTE zone of this displacement leg, and you're also at CE of this wick. So you had double confluences as to why price is likely to retrace or reverse from that level. Nope. $503, $503, $503. Okay, so why 503, Sebastian BB? Why 503, bro? Come on. Tell me you know. Tell me you've been watching my videos. Come on. There's 3 opportunities, and we're going to go through all 3 on this stream, right? This is a serious lesson you guys are getting. Boom, Sue, up in the house. What volume imbalance though? What volume imbalance are we looking at? Specifically. Come on guys, which volume imbalance are we looking at? What time frame is that volume imbalance on? Nope. What time frame? Just give me the time frame, the chart. What chart are we on? What chart is that volume imbalance on? Don't look at my chart. What chart is that volume imbalance on my chart on? If you don't know, just say you don't know. Alright, it's a 15-minute, guys. It's a 15-minute. So if you follow me as a trader, you'll know that 15-minute volume imbalances is something I've uncovered and something which I use like support and resistance. Okay? It's something which I use as support and resistance. And who can tell me where I use 15-minute volume imbalances? Who can tell me where I use them? Boom, Gautzin. No surprise he's in red pill. So, exactly, at swing highs, swing lows, at pivot points, right? So, if we jump down onto the 1 minute. How could you have got in on that 15-minute volume imbalance? What candle would you have got in on? They're valid for a long time, Sebastian. I use them throughout the day. Look how price respected it at the 445 candle. That was an entry for you. Off that volume imbalance once it broke through. Support and resistance in the sense how support and resistance should be used, right? To a tick. I don't do zones, guys. I do precision entry. My drawdown are ticks, not handles, not ranges, ticks. You place your entry on that volume imbalance. You have no drawdown whatsoever, right? There was your second entry. If you missed the first entry inside the premium of that range, there was your second entry. All right? We're going to go through one more. All right, we've got one more. Who can tell me what we had in here as another entry when price returned up into this area again? What did we have? Who can tell me what we had? It's on my chart. The giveaway's there. Oh, sorry, lost you guys. 1 second. Lost you there for a minute. God damn it. God damn it. Mitigation block. Mitigate. Galton, I'll let someone else answer. I know, just you don't want to be that guy, Galton. You don't want to be that guy. So exactly that, mitigation block, right? So why is that a mitigation block? I hear you ask. Why is that a mitigation block? Let's break it down. Let's break it down, people. Price moves higher, moves lower. And if you don't know what a mitigation block is and you want more details, I've done a video on it in my ICT series, so go and check it out. But this video, this is then a failed swing high, right? And so what we're looking for? The lowest down close candle in between those two swing highs, right? That is your mitigation block, okay? So when price broke through, where could you have taken your entry? Guys, these are all, you had so many opportunities to get in here. Personally, I would have done this, right? Stop above the volume imbalance. The volume imbalance would have been your stop, right? 6 to 1R, guys. Right? That's all you got to do. My minimum is a 4 to 1R. I don't trade scalpy stuff. I don't trade 1-to-1. That is your trade setup. One of those, how many handles is that? You know, that's your 6 handles. Bosh. Thank you very much. One and done. Go home. Go tell Carl you're handing in your notice. See you, Carl. See ya. Right? Just repeat that every day. That's all you've got to do. It's not difficult. It's not difficult. When you know what to look for, it's not difficult. The key is to stay patient and know when to execute on your trades. That's all you have to do. That's it. Okay? And ultimately, price didn't even get to your target. But you stay patient because ultimately, price is just shaking people out before the move. What did it come back into? Came back and touched that mitigation block, right? Came back and hit that mitigation block. So you just leave your stop there. If you wanted to pay the trader, if you take more than one contract, sure you can take partials on the way down, but you know, you've got to have confidence in your bias, and price is algorithmic, so it's running to these levels. These levels aren't just drawn out because I'm putting them on the charts for fun, right? They're not. This is how the computer is aiming for price. So this is a level. The standard deviation from a swing high to take out old lows is a level that the algorithm, the computer is running for. So you don't worry when price is doing this stuff, because all that is doing is shaking out retail. It's shaking out people off the larger move. Okay, and look where prices ultimately run to, right? All of this is just shaking people out. It's scaring people out of the move. But we know as educated traders is that a mitigation block is the line of the sand before price is going to run into a premium. So price is likely to reject off of a mitigation block. If price gets above a mitigation block, well, guess what? Guess what it's going to go and do? It's going to go and run into a higher time frame premium. Okay, because it's broken through the mitigation block, so it's going to go search for liquidity voids, it's going to search for fair value gaps, it's going to search for an order block, it's going to search for a rejection block, it's going to search for old highs, right? But the mitigation block is the line in the sand. So if it fails the mitigation block, guess what? It's going to go back through the opposite direction. So it's going to look for a breaker block, liquidity void, fair value gaps, order blocks, rejection blocks, old lows in the opposing direction. So what do we have on the higher time frame? Right? What do we have on the higher time frame? We have a rejection block here on the hourly. So my eye is automatically drawn to this. All right? You know, so this 39.78, which would put us look. right at the low of the OT of that range, right? So let's have a look. Anywhere between here and 78, I'll be looking for to see if price wants to have a small retracement. If it crashes through that, I believe we're going to go down to the old new week opening gap. All right. All right. So guys, that clears up everything today with this morning's London session, and that is literally my one and done. Okay. So for those of you who are sort of in my Twitter, you would have seen my trade this morning, right? My trade this morning, I didn't need to be greedy, but this was my trade. You know, got in at 404.50, in at 404.50, so I top ticked it, and I got out at 96.75. Right, I don't need to be greedy. That's my morning trade. I've got other stuff that I need to do this morning. You know, setting up this YouTube and what have you. I'm you know, more than happy with 8 handles in the morning. You know, just short of $500 on one account. I've got multiple. Right, in at 404.50. Right, back on this. I got in on the volume balance. I missed this premium entry. I got it back in on the volume balance. Okay, so that's going to be it for this morning's live. I hope you found it useful, guys. As always, trade safe, trade smart, and I'm going to jump back into Red Pill's live. So feel free to come over and join us if you wish. If not, I'll see you on the next live on YouTube. But until then, guys, trade safe and take care.